Hello, everybody. Excited to be here today, kicking off Global Blockchain Show. As our MC mentioned, this panel is very focused on the blueprint for growing a successful blockchain ecosystem. We have some esteemed panelists here today. I'll be moderating. I'm Alexis Johnson, co-founder and CEO of Lightnode Ventures. We're a Web3 venture studio and advisory firm based out of New York. I'll let the other panelists introduce themselves.
Thank you, Alexis. Hey guys, I'm Shuyao, one of the co-founders of MyGaze. We are the first real-time blockchain, crazy fast.
Hello everyone, excited to be here. I am Patrick O'Kane, I'm a general partner with Borderless Capital. Borderless Capital, we're a blockchain native investment fund. We have about 600 million in AUM. And we cover everything from early stage thematic funds to later stage growth investments. And we also have a liquid strategy as well.
GM everyone. This is Belinda Zhou. I am the founding partner for Sharding Capital. So Sharding Capital does more early stage investment. We aim to find the next 10 to 100x opportunities in the Web3 space. And we tend to prefer to write the earliest checks from day one and support the founders as much as possible. So we are more activist and operator type of VC. And our strongest suit is actually marketing and a lot of narrative building around the key areas such as APAC regions and the Middle East. Glad to be here today.
Hi, everyone. My name is Vanessa Grellet. I'm the managing partner of Arche Capital. We recently launched this fund to focus on early stage investing in infrastructure at the confluence of financial services and blockchain. As you, we're pretty hands-on with our founders, and I think we want to discuss today a little bit on, what it takes for a project to be successful and how we can help.
Thank you, everybody. So my first question for everybody is, what would you consider, part of the foundational and necessary elements required to build a thriving blockchain ecosystem from scratch? Starting with you.
So there's so many necessary, what was that mean? So many necessary components to start a great blockchain ecosystem. I think the table stakes, you have to have a phenomenal team. And right now, because the blockchain ecosystem, broadly speaking, is really maturing and becoming mainstream, you have to have differentiators. You can't be building something, just an iteration on what's already out there. And then there's a lot of geolocation considerations as well. So regulatory clarity is huge right now. So that was one of the problems that we had in the US. There was a lack of regulatory clarity. I think we're hopeful with the new administration that we're finally going to get regulatory clarity, and we'll have more robust blockchain ecosystems built out of the United States. And then, moving forward, you have to have the technology is one thing. The technology has to be there, but in blockchain, you have to build a community. So that means you have to have a robust developer network, and you also have to have great marketing to get the word out there. So we tend to look at all of those components as a whole when we're evaluating our investment decisions.
Yeah, I think definitely Patrick nailed it. Since we do take a more participatory approach when supporting project, we kind of summarize there's a good recipe for a project to build a good ecosystem. So first is the team. The team need to have the relevant background and technical know-how to build their project. And then it's a technology and a product side. You need to have that tech and product for people to actually come to your platform and interact with your platform. And then it's having the 1 or 2 killer dApps, like decentralized apps to start with. So users will actually want to come to your platform, participate in the ecosystem, and then you kind of build build that sustainability by luring them into trying out other dApps in the ecosystem. So for me, I think these are three good flywheels to have in the ecosystem. You have the team, you have the product, and then you have the retailers who want to stay in the ecosystem. Then it's actually the community building part. So you need to make sure your communities are well incentivized. That's why I think tokens actually come into place to kind of link everyone together. And the last bit is actually I think to really make a project or ecosystem successful, there are two ways. You can either pay to win or play to win. So sometimes when you see a project kind of launch with a bang, with a heavy hit, actually there's a lot of coordination behind. So you actually need to get a lot of relevant parties to support the project all together at a good timing. Then you have the very impressive go-to-market effect. Sometimes it is having the right accounts to talk about you guys, and these say influencer accounts or opinion leaders, maybe you have 50 to 100 of them talking about your project, and then they will actually influence hundreds of thousands of their users trying to see, oh, this is something, I want to check it out. Maybe it's very meaningful for my community or for my small audience as well. So I think the teams, if they want to build a good ecosystem, they need to engage smarter accounts and relevant backers to vouch for your project as well in the early stage, so you also get a good flywheel happening. So having that capital or the ability to strategize the capital is key, and a good strategy, and discerning which account is the right account to be included in your backer system. That's very important. Yeah.
Airdrops and vibes. I don't know. I'm joking, but only half. I think it's all about telling a story and bringing people into the story and having people wanting to be part of that story. And that's what, the founders need to figure out with a lot of other people in the existing community. The second part, which I think I really want to stress, is the ability for people to make money in the ecosystem. And sometimes we forget that. And it's not just airdrops and airdrops farming. There's tons of other ways for people to stick to a project through the story, but also because they were able to make money early or they were able to contribute to projects. And I think that keeps people very sticky to some ecosystems, and it doesn't mean that they don't go to other ecosystems, but that's where they'll want to build the future of their projects.
I guess I'll go last. I think as the only operator on the stage who actually is building a blockchain ecosystem, I think the only secret ingredient is the team needs to have the dog in them. Right? The team needs to know that this is a long-term project. If we look at all the top 100 coins on CoinMarketCap, you can't really have a coin that's just there for 6 months. The one that stays there for generation, for many years, is the one that the founder is still very active in building. So I think the only way to do things is if the team has a dog in them.
I would agree. And when it comes to, growing in ecosystems, some would argue that marketing and business development is even more important, than the technical development and the technical details of the project itself. Would you guys agree, disagree?
I definitely agree. We've seen so many projects that had phenomenal tech, and we backed some of them, but where they failed was just they failed to get that community around them. So that is really, like I said, the tech is table stakes, and you need to have good tech, but that's not everything in blockchain. And it all comes down to marketing, and it comes down to the community, token incentives, and building that narrative that inspires people to be part of this community and stay in that community. So tech is really table stakes. There's so many brilliant developers and builders in this space. So the key, and I think one of the hardest things to nail, is creating that sustainable community and growing that into the future.
I agree and disagree. I think, if you build the tech, they will come, doesn't work. But if you don't have excellent tech and you don't have innovation, no one's going to come, despite any efforts. They will come in the short term, but you really need to have differentiated tech and excellence in the tech for a large ecosystem to thrive and really be differentiated in the long term.
Totally agree. I think in bull market, things might be a bit confusing because you see teams without any product getting like really good traction in bull market, because in bull market, people look at where the liquidity or money is. But long term, because I think quite a few of us have gone through a few cycles, actually, especially during bear market or when the market is not so so euphoric, actually it's teams with good product that have that ability to build that user retention in their ecosystem. You need to have a decent product for people to interact with. Yeah.
Awesome. As we have several investors on this panel and founder on this panel, just curious to hear your guys' opinions and thoughts on the key narratives and trends in Web3 right now, in the future. I know at Borderless, you guys put a lot of emphasis on DePIN. A lot of you guys have invested in a lot of different verticals within the space, but wanted to hear your guys' opinion.
So we have a thesis, right, for MegaETH. We're bullish on product that provides emotional value to end users. What does it mean, right? It really means that the day of purely trading for the gains is gone. The most of the important apps in Web2s are TikTok and Instagram. Why do you like them, right? They allow you to flex, they allow you to show off, they allow you to connect with people, and these are all emotional values. So to us, it's really identifying founders who are using crypto-native primitives, right? Whether it's token, asset, or P2P nature of a social graph that provides this little aha moment to end users. So that's our thesis.
For us, we see the way. I'm launching a new fund, and the way I'm looking at the ecosystem unfolding is where the product market fit is coming from. So clearly, financial products, first use case. Stablecoins are the killer app. Stablecoins were developed as a settlement layer for the crypto ecosystem, and now they're used broadly by real traditional institutions. So a couple years ago, the market cap for stablecoins was 1 to 2 billion. Now it's roughly 200 billion. Then real world assets, so tokenization is coming in a very meaningful way. BlackRock is tokenizing funds with Securitize, one of our portfolio companies. So right now, financial products are what we focus on out of my fund. And then moving down the line, we have decentralized physical infrastructure. I think that's like the next iteration of real product market fit, and those companies are going to become enterprise ready very soon. So companies like Helium started it. We were early investors in Helium, and DePIN is really expanding out into every industry, and that gets me the most excited, where you take real world use cases and provide blockchain incentives and token incentives to build communities to manage and scale these massive physical infrastructure projects. Companies like GeoNet that have real-time kinematics data, so essentially taking GPS or other satellite location data and providing pinpoint location within centimeters of accuracy. And that technology, that data is being sold to real-world industries, agriculture, construction, autonomous vehicles. We're seeing so many unique DePIN plays. So we're one of the most active DePIN investors in the space. So we're keen on that. And then in the future, I think the way I look at Web3, Web3 is clearly blockchain foundation, but the real Web3 is coming from where, with AI agents communicating with humans, AI agents interacting with other AI agents, and all of those interactions online are going to be managed and governed by a blockchain foundation. And I think that's the area in the future that's going to have a lot of impacts, and blockchain is clearly going to play a key role there. So that's how we see the industry unfolding. And then clearly, the connective tissue putting all of this together is interoperability. We have to have great interoperable solutions. No one really cares what ecosystem they're building on. Non-crypto native people, my grandma won't care if she's on Solana versus Ethereum. She just wants the products to work. So we focus a lot on interoperability as well.
I love the sharing. So basically, we are quite bullish on several verticals, but everything in crypto actually rotates really fast because the space moves very fast. So in terms of vertical, we pretty much look at everything. For example, Patrick mentioned stable coins, interoperability, and beyond that, we have account abstraction, etc. We like any supporting tech that helps onboard NOMI users into the Web3 space. And we are actually quite active in some active niche these days. So we are quite bullish on meme coins and the whole culture represented by them. And we're quite bullish on consumer-facing applications. For example, we like prediction markets, like polling markets that can lure a lot of Web2 users to involve in the Web3 product. We like a product also like Moonshot that helps really ease the user, just NOMI users to punt or aid meme coins from the crypto space. And we also like the intersection with crypto and AI. So recently, you probably heard a lot of AI agent meme coins, and that kind of become also a carrier for AI agents building a really meaningful impact in the crypto space. And it's like a Trojan horse for a lot of people to understand, how holding a token is part of a community building and is part of the culture building process. And then, in my opinion, for example, meme coins actually have a longer staying power than NFTs from the last cycle, because NFTs, they are less they have less liquidity. But for meme coins, they can be listed on centralized exchanges. They can be listed on apps like Moonshot, etc. So more people will be able to participate. So having that level of penetration is actually very meaningful. And a lot of people think it's stupid, maybe a year ago, meme coins. But now I have seen quite some more nimble and flexible funds around me. They are actually seriously allocating a decent amount of capital into meme coins, etc. So I do think that that's very telling itself. And then apart from this newer vertical, we are really bullish on DeFi. I think it still has a really good chance for institutions to actually size a good chunk of capital, and then a lot of traditional players are looking into DeFi and also RWA, etc. So that's actually a very good bridge to bridge the traditional finance market to the crypto market. So I think everything in crypto is kind of interconnected. So it's very important to, if you have the chance to look at everything and then try to think a few steps ahead and then place your convictions and then stay with the convictions until it takes off in the bull market. Then you can rotate to the next one with that certain deployment. Yeah.
So to add to sort of the perspectives here, we do stay on the infrastructure, very low infrastructure side. Not that we don't like consumer apps or meme coins. We just think there's more work to be done for high throughput chains, for interoperability, etc. And so we like that space. other area of focus, in addition to AI and financial services, for us is ZK and privacy, and security, because we think these things need to be strengthened too, in order to bring in additional players from the financial services, because you're not going to be able to trade in public with public information on your trades in the future. So that's how we're thinking about things.
Awesome. And for Shuyao, since you're one of the few builders on this panel, what strategies have you found most effective when it comes to attracting and retaining top developer talent, especially when there's so many other L1s, L2s, and other infrastructure projects in the space?
Yeah, so since day one, our principle was to work with builders who are building application that's only possible on MegaETH. And we call it Omega. And so those who are building that type of use cases, I am never worried about them going to any other chain, because they can't, right? So here I would politely disagree with Patrick's thesis, because interoperability here does not work. Because our apps cannot be ported to any other chain. And I'll give you an example. So we have someone who's building a decentralized VPN, right? So two co-founders. One is a pretty killer product manager from Web2. Another was an ME researcher engineer who has raised like $10 million from top tier VC in the Cosmo ecosystem. He had to shut it down and come to us. And the decentralized VPN is only possible on MegaETH because we are the lowest latency chain ever possible. We can get millisecond latency. And for you to have a bootstrapped nodes network on any other chain, especially for example on Solana, it just wouldn't work because Solana has 400 milliseconds. So my view is to have a sticky and successful ecosystem, you have to build with builders who are loyal to you, not because you're giving them token, because you're selling them a dream to build $1 billion protocol. And that means we only work with builders who are ambitious enough to build the next 5 years on $1 billion protocol. So if you're telling me you're building a fork or something slightly better than a fork, and I would tell you, right, go to another ecosystem because you can also get grant from them. Why would you want to build with me? And in fact, for people who are building MegaETH, one of the big parameters for analysis is whether you can raise money from VCs. And up until today, we haven't launched our testnet yet, public testnet yet. But there are more money into MegaETH apps than money into our chain. Right? And by the way, we raised $20 million, not a small round. But there are more than $20 million into our applications, which are called Mega Mafia. So I don't think I've built anything successful because the chain doesn't exist yet. But I would say the only way to build a sticky ecosystem is to have people who can only build something with you. And you have to think big, right? That's when I said you have to have the dog in you. Like you're not building $10 million protocol, 100 million. You're building the next freaking $1 billion protocol.
Awesome. And how would you go about, and how do you go about, creating engaging community dynamics that go beyond just speculation?
Is that me question?
Yes.
Or, how do I go beyond speculation?
Yeah, how do you create an engaging community that goes beyond just speculation?
I mean, I don't have an engaging community to start with. I'll be very honest. I get dunked on Twitter all the time by other fast chains, and no one defending me. But it's being fixed right now. I love speculation. I think about blockchain not as a distributed system. I call blockchain an asset ledger. Right? Without asset, you might as well just do a quorum, which Vanessa and I have worked on it before, right? And there's a reason why we don't work on quorum anymore. But I love speculation. But what I think the difference is, where are you using the speculation? I think often than not, speculation leads to financial nihilism, which means like there's only speculation. That's not why I'm here. But I do think speculation can fuel into emotional value, right? So I'll give you another example. That's an application that's built only on MegaETH. They've raised a round from, I think it was led by Anagram and Robot Venture. So it's a prediction market, but you're not predicting a major event. You're predicting trends. So for example, you're building what's a popular color for jeans next year. Right? And that's fun because young people want to be fashionable. And those who are leading the trend of, what's the popular color next year probably want to get rewarded, right? And that's the type of application that has speculation, but it fundamentally provides emotional value. It's kind of cool. It's like a Pinterest, but you're allowed to put a little bit money in it.
Yeah, I would agree, and I think obviously with meme coins, there's been a lot of speculation, but also community building at the same time. And so my next question for panelists, especially for investors here, Patrick, Vanessa, and Belinda, from an investment perspective, what are the key indicators that you look for when assessing the potential of a blockchain ecosystem, whether or not you want to invest?
So I focus on later stage, and that's a little different than pre-seed or seed. So I focus a lot on traction metrics. So if I'm doing a pre-launch token, it's got to be, just based on how I'm constructing the portfolio, it's got to be one of the blue chips. So if I'm investing before they launch, they have to have existing partnerships. They have to have a listing on one of the top tier exchanges. So the way I look at investment decisions is a little different at the later stage. And I don't do the fun stuff. I don't do consumer. I do very institutional stuff. I do the quote unquote boring things in the space. So a lot of financial infrastructure. I do cybersecurity plays where blockchain capability can be integrated into government agencies for kind of dual use defense tech. For example, I invested in a company called Cat Labs that builds a forensics tool to identify crypto-related material on seized hard drives. That the government seized from lawful criminal investigations. So those are the types of plays that I look at, and it really comes down to the ability, the traction that they have existing, and their ability to grow into really large markets. So those are the considerations that I look at.
Since we are more early stage, so it's a little bit difficult to find like tractions when we look at the project. So we focus more on the founders. Like it's pretty much a founder's bet for us as an early stage firm. So we will look at like if the founders are very like sort of in a founder mode, like very actively go out there and promote what he or she is building. Like the team need to have that like spirit to do that. In crypto, it's really important. And then also, if the team members are nimble and flexible to adapt to different market conditions, because this month is very bullish, but next month it could be very bearish. So they need to like stay very flexible with the whole operation and the building process as well. And then it's like how deep they care about like their users and their community, and how often in their early stage are they communicating with their community members, like members go to who want to talk with the platform or their product. So sometimes we would like lurk in their Discord channel for like a couple of weeks and then ask questions and see how fast the ticket is addressed. If it's like in 24 hours, still no one like respond, or no other community members get responded, we would like feel this is not a good bet, because the founder might be occupied, maybe like too occupied in the building process. But like here we are in crypto, so ultimately you want to engage your community to do a lot of things. So having that mindset from day one is really like a cheat code to build a good ecosystem or build a strong community. Yeah.
So I also come in on the early stage, and it's very much a due diligence on the team, but also on their perception of the market and what they're building and how it fits into the overall market. And of course they can pivot after, but it's also, we want to see that they are the specialists of what they're doing, that they deeply understand the area they're going after, that they are actually solving a problem and are able to articulate that. We also want to see other traits, which is the first of which is integrity, and maybe some humility at some point, at least when you start. It's refreshing. But yeah, I think capacity to give feedback, openness, and the ability to create a team is really important. We usually recommend to have 2 or 3 founders. It's very hard to build a company alone, especially in this environment. And it's really important that the team is complementary and that we're able to understand the blind spots and help them build the team.
And so my last question here is, what are some of the most significant barriers preventing mainstream adoption for ecosystems, and how can ecosystems strategically address those issues?
Founder made too much money from meme coin trading.
I think the 2 biggest barriers for mainstream adoption that come to mind for me are regulatory clarity, and then the second would be user experience. And both of those are improving globally.
I agree. I think the user education is quite key. On the one side, I think like products should really focus on the user experience. Otherwise, even some crypto friends like have difficulty using wallet, and then kind of get confused when their wallet showing different numbers on different phones, etc. So that's that, but also the user education part. Like yesterday, I was in Abu Dhabi FinTech Week, and then we were talking about stable coins. And then one thing that we mentioned that actually the younger generation, like the guys, the younger kids in Africa, essentially, they don't talk about stable coins anymore because, like, ever since they start doing all this transaction, they were using stable coins. So I think like the study and the education and the level of penetration can start as early as possible. So it's already part of their daily life. So I think all these initiatives will be quite helpful for crypto to get more adopted. Because once you have one item that they're familiar with, like stable coins, etc., then they will be more interested to try out the product and then do the deposit, withdrawal comfortably, and then do the on-ramp, off-ramp, etc. Yeah.
So I agree with the UX. I think we have a lot of work to do there. The other thing for mainstream adoption and beyond the UX is, I think, the token economics, because how do you create token economics when you have a mainstream user? Token economics work pretty well in distributed systems and the lower layers, and incentivizing developers to create things on top of a specific ecosystem. I think we have yet to see a successful token economic model for mainstream users, and makes me wonder how differentiated these apps will be in the future compared to just regular Web 2 and the business models there. So that's what worries me in the future for mainstream adoption. And maybe it's we don't see the blockchain anymore and we just see the dApps, but then what's different, right? How do we care about decentralization, etc.?
I think one I want to add is the security, because we are on a path to promote self-custody, but the issue with self-custody is that you can lose your asset easily. So I think if some companies are dedicated to help to address this security part, it will also help a lot with the mass adoption as well.
One comment I'd like to add, I think in general the space needs more education, as well as just gamified education for normies that are generally crypto curious. And I think as a space we need to do a better job of producing and creating educational content. But that's the last question, and I'd like to thank all the panelists here for participating. Thanks, audience, for tuning in, and looking forward to the next panel. Thank you.